Hi everyone, welcome and thank you for joining us today. My name is Jane Hewitt and I'm the Capability Building Coordinator at Connecting Up and TechSoup New Zealand. Connecting Up and TechSoup New Zealand are part of the Info Exchange Group, a not-for-profit social enterprise that tackles the biggest social challenges through the smart and creative use of technology. For those of you who haven't attended a webinar session with us before, Connecting Up and TechSoup facilitate an annual training calendar of online webinars, workshops, boot camps and webcons to help the social sector upskill in all things digital. And you can check out our training and events calendar on the website TechSoup New Zealand or Connecting Up. So today, welcome to the webinar, Financial Management Essentials, How to Understand and Use Your Organisation's Financial Information, with Richard Holstein from MYOB and Craig Rhodes. Just before we begin, we'll begin with a bit of housekeeping today. So all the lines are muted, so if you have any technical issues, please type them into the questions box on your GoToWebinar panel, and I should be able to assist you. If you have any questions during the session, please also type those into the questions box, and Richard and Craig will answer them in the Q&A session that will be coming up at the end of the webinar. And please note that your comments and questions aren't visible to the rest of the group. If you're on a Wi-Fi connection and have multiple programs open, please could you shut those to get the best possible audio and video quality. Please note also that this webinar is being recorded and that I'll be sending along the recordings and the slides at the end of today. And before we just start, I'd like to ask everybody if you could take a couple of minutes to fill in the survey that will be popping up on your screens once this webinar is over. That's all from me. I will pass over to Richard now to get things started.
Thank you very much, Jane, and I trust that you can still hear me quite clearly. Is that right?
Yep, all good.
Take that silence as a yes. That's great. Thanks for that. This is our first time, actually, certainly between Craig and I. It's our first time. We've been a partner of Connecting Up for some time, MYOB, but our first time delivering a webinar through this platform. So apologies in advance if it looks like, oh, are we sure what's going to happen next? We've got an awful lot of content to get through. Craig and I have actually worked pretty hard to try and cut that down to the bare basics, I guess, and the really essential stuff that we want to get across today in terms of some of the financial reporting. But we've got plenty of content. We are going to try, because as you can imagine, financial management essentials doesn't sound like the most fun thing in the world, but we're going to try and keep this as engaging and as real world and relevant as possible, okay? So thanks very much for taking time out. I should have said actually started off with kia ora and good afternoon to everyone in New Zealand, Aotearoa, who's joining us this afternoon. I guess g'day, mate, to our friends in Australia. I'm based with MYOB in our Christchurch office. And Craig actually is also a Cantabrian here in New Zealand, but has some significant experience that he's going to be able to share with us throughout the next 60 minutes. So Craig, welcome along. Thank you very much for joining me on this webinar.
Thanks, Richard.
I'll just get you to check that you're, oh, good man, good man. Wasn't sure, I thought maybe we'd had you frozen there for a second. Now, your background, actually, you're pretty, I think, a prime person to be giving expert advice as far as today's topic goes, because certainly I know your focus is primarily New Zealand, but your background, 30 plus years in terms of finance management, accounting and those sorts of things, includes quite a lot of work with not-for-profit organisations of different sizes and different shapes, basically. Is that right?
Yes, I guess, Richard, I've been involved for 35, almost 40 years now at both local, national, regional and state level with not-for-profits. I have an accounting background, so I work with a team of about 75 peers here in the city in Christchurch with a great firm called Nexia. So couple my passion for not-for-profits and accounting, it sits well with the 35, 40 years I've given at governance level for not-for-profits.
And I think when we talk about, we'll get into the nitty-gritty detail of it very soon, when we talk about balance sheets and profit and loss and cash flow and forecasts and all that, good chunky financial stuff, effectively there are many things that go across no matter what type of business you are, whether you're not for profit or you're just about profit. But it's great that we've got your expertise, I think, and experience on deck as far as the webinar goes today, because you're able to put things, I guess, into much more of a not-for-profit language, I suppose, in terms of making it as relevant as possible to the people who are joining us from around Australia and New Zealand. So, yeah, thanks again for your time, mate. Hey, one thing, now that we've introduced ourselves, one thing that we would love to do, Craig and I, is find out a little bit more about you. So I understand Jane's going to be able to put up a poll on screen. We just wanted to get a bit of a feel. We've seen some of the names of people who are with us this afternoon and this morning in Australia. But we just wanted to get a feel for the sorts of organisations you are, I guess, and where your services are delivered. So would you describe yourself as, I guess, a local or a city-centric organisation, not-for-profit? Or are you bigger and wider than that? Are you broader? So in New Zealand, it might be your Canterbury or the Auckland region or Waikato or somewhere like that. It might be Western Australia, for example, if you're an Aussie. Or indeed, are you national? So do you have multiple offices, multiple sites throughout the country you're based in? We'd just be really, really interested to know. So I'll let Jane put that on screen. And I'll assume that there's a really easy way of interacting with that poll and just letting us know how things are at. It looks like there was quite a nice cross-section, I think, of not-for-profits when I looked at the attendee list, which is great. I'm sure you'll find something relevant in this view, no matter how small or how large you are or where you're operating. And I would imagine most people on this webinar to have in some way.
Sorry, Richard, that's quicker than the election results came through. I'm quite impressed.
Well, that's good because I can't see that on my screen, so I'll take it for granted that you can see it then, can you, Craig?
Yes, 50% local, 43 state regional, and 7% national.
Okay, well, that's good to know. Yeah, so it almost sounds like a bit of a cross-section of not-for-profits in general. I think where most people are generally smaller and more attached just to that one specific community. Others, just like the business sector, I guess, are a little bit larger, and then there's a smaller portion of people who are much larger and cover the breadth of a country, in this case, either New Zealand or Australia. So that's great. We'll keep that in mind as we answer questions a wee bit later on, and of course, as we talk through things. And here's a bit of a list of what we're going to be going through. So just a wee bit of quick scene setting, just a bit of context, so we can kind of place ourselves here and now for what we'll be talking about. The three things we're going to focus on in particular are balance sheets. Spend a bit of time there. Profit and loss. In fact, I think I've got this around the wrong way. It's going to be profit and loss first, then balance sheets, and then we're going to spend quite a bit of time on cash flow statements and forecasting. And Craig's got some really savvy advice and tips around cash flow, which is particularly important, and there's some pretty startling stats around businesses and cash flow, both in Australia and New Zealand too, that we'll share with you. We'll talk very briefly about the benefits of using digital tools. I wouldn't be doing my job wearing this MYOB t-shirt if I didn't go, yay, digital, and software and platforms and all that stuff, but we'll only touch on that very briefly near the end. And I'll take you through, in case you haven't already seen us on either the TechSoup website for New Zealanders or the Connecting Up website as far as Australians go, how you can access MYOB and the sorts of offer and pricing of those sorts of things we can give you. And also I'll pass on the contacts for the people at MYOB that you should be talking to and contacting if you want to do something with us. We wish that you will. There may well be some, I'm sure, some customers of ours watching and listening to this webinar. So the world that we're operating in, let's not dwell on this. I think sadly we've all had to live through it, and we will continue to live through it for months to come. Craig, this has been a pretty tough time, but I mean, what I picked up here from online is really just the basics of the fact that COVID has really hammered us, well, really from a, I guess, a population point of view in terms of our mental health and, you know, physical well-being, but clearly from a business and economic point of view, this is tough times in both New Zealand and Australia, isn't it?
Yeah, most definitely, Richard. I think more so than ever with this COVID pandemic that's hit us, there's been more emphasis than ever on the numbers. I think, you know, the ability to be able to sort of read the numbers, sort of recast the numbers when we've got sort of situations in front of us that we've never faced before. So the focus comes back to best practice financial forecasting and, you know, shortened seasons, shortened income streams, mergers, acquisitions, regional and state mergers. There's so many opportunities that COVID have left us with. And one of them is the way we're talking today, virtual webinars and the likes.
Yeah, absolutely.
Yeah.
We've all very much changed the way we work. I know you guys at Nexia have, and certainly MYOB was pretty mobile, we would like to think anyway, pre-COVID, but certainly we've really shifted to a very, I guess, anytime pivot type organisation at the moment. So yeah, so we all know what's going on there. Inevitably, it's had an impact on everyone's organisation, you know, to a lesser or greater extent, I would imagine greater in many cases, the people who are with us on the webinar. Just a couple of quick things before we move on I wanted to share with you. It's all very well talking about COVID, and that's clearly, you know, our current challenge in a big, big way. There's a great quote here from a recent not-for-profit governance and performance study that was carried out by the Australian Institute of Company Directors, which I think is really important to touch on. It was great that they were able to do one recently, despite what we're all going through. There's a quote there that says, COVID-19 was the tide that went out and showed all those who were swimming naked. And effectively what that is saying, in a rather, you know, fun and interesting way, is that certainly for not-for-profits, the not-for-profit sector, certainly in Australia, but I think this is borne out in New Zealand as well, there were an awful lot of organisations, you can see there from those stats, that over 40% of organisations had actually made a loss in the previous 3 years. So there's a lot of work to do there in a range of different ways, but underpinning a lot of that is really about understanding the finances, reading those reports better that we're going to talk about, and I guess getting some better insight so that you can make better decisions for your organisation, or indeed helping those people who make those final decisions for your organisation. That's really, really important. So you'll see when Jane sends out the deck later on today with the follow-up email that comes out after the webinar, everything you see here is linked. So all the various graphics and bits and pieces are linked to various websites and things on the internet. So be able to, if you have any interest in reading further about some of the things we'll talk about, then you certainly can. So yes, interesting world. And as Craig said before, just to reiterate, I mean, really now than ever before, it's incredibly important to be on top of your finances. I mean, it's always been the case, but I think we can really appreciate the challenge that this year has thrown up, more so than any other year perhaps that we've been operating. So really, really important to get a good handle and a grip on reading those particular, I guess, the financial reports that you can produce easily with software, but you can do it in other ways. So let's start, Craig, with profit and loss. Can you just give us, I guess, a bit of a summary in terms of how you, given your experience as an accountant, see profit and loss and where that fits into the sort of general reporting scheme of a not-for-profit organisation?
Yeah, well, I guess before I start, Richard, the one thing I'd have to say, and not trying to sort of blow your trumpet, but good software can soon become your best friend once you become sort of attached and enabled with it. So, you know, accounting talk, efficiencies, ease of use, time savings, and not-for-profit organisations where time is poor for most of us, we really, really need good software. So, look, your question, profit and loss, yeah, we're all very familiar with the term. I guess in all the years I've been involved in governance, I've seen it as my role in key positions is to being able to support the board with good decisions around finance. The profit and loss is paramount in that space. So the profit and loss comprises simply, you know, your income less your expenditure, and sort of whether or not you're making a profit or not. Good software such as MYOB is going to provide us with the ability to measure that more accurately, more regularly, and to compare against our budget as we draft from year to year to year.
Really is that fundamental track of financial performance, isn't it? That fundamental tracking of financial performance, that's what a P&L, as you usually call the P&L statement, will give you.
Exactly. So the profit and loss statement, the statement of financial performance, as they're also called these days, yeah, that's the main document that provides that profit or loss certainty.
So we've got some stuff that you can take away with you very soon, but I wonder first, Craig, if we just jump into, now this is using a slightly older version of MYOB, which has been updated. I can talk to you a little bit about that later on, but fundamentally, if you're using a piece of software like ours, and this, despite Craig's wonderful endorsement there, it really isn't a pitch for software. This is really just showing you, I guess, number one, what a profit and loss or a balance sheet looks like through a tool like ours, but also because it's all very well saying that it looks very simple, but still with someone like me, and I'm in marketing rather than finance, and there's a good reason for that, as you'll see when I ask questions of Craig as we go through the webinar. When you see a screen like this, Craig, you know, a client, you might be sitting next to a client, for example, and looking at a profit and loss report that starts to come up, a nice consolidated report like this on a tool like ours. What are the key things that you're seeing here? And I see there's some stuff in red, there's some stuff in green. So how am I meant to read this profit and loss statement?
Yeah, look, good question, Richard. So the MYOB product you're looking at here and the profit and loss shows the condensed version in a form of sales versus GP, expenses, operating profit, etc. So that can be further spread out if required into actual expenses. But for purposes of this report, you've just shown the consolidated position. The reds and the greens, you know, a picture tells 1,000 words. So red not so flash and green looking pretty good. So instantly the reader can see where they're traveling well and perhaps areas to focus on in the red. The actual and budget, every organisation, and in particular not-for-profits, need a cash flow to support their business and or a budget. We'll go through the differences in those soon, but the reality is this document here shows how this particular business is measuring for its year-to-date results according to the budget of how they thought they were going to go.
Gotcha. And at this point, when I look at the bottom line here, the net profit line, obviously right over the bottom right-hand corner, 57.5%, that's negative. So is that showing me it's a decline year on year? Is that right?
Yeah, it's showing you a decline against the budget, a variance against where you originally anticipated you thought you were going to be. So that's where the board and the management works with the business. And generally, not as much as a weekly scale, but certainly as minimum as a monthly scale is where we sort of drag those figures from. Most accounts are paid monthly. We certainly scope for our earnings to come in on a monthly basis.
And as you say, this is a consolidated view, so you can certainly drop down and see all the various expense lines, for example, as part of this, and other information as well. If we click through, I guess there are a range of things you can do here. You can certainly click through to see things monthly or quarterly or yearly. I understand we've got an example in more detail of a comparison month to month here. So you can see, I guess, we're looking at last year's, April 19, May 19, June 2019, and July as well. So Craig, if someone was looking at something like this, again, we've got the unders, we've got the overs in terms of the red and green. Is there a particular part of this that you'll be, as an accountant, trying to delve into or trying to understand more?
Yeah, I guess after you first analyse the initial expenses as to which ones are under and over, and/or reasons for cost of sales, which may very well be a stock type issue. It just gives you a bigger picture of where you may have paid an account late or received an account late coming in just after the end of the month. So it just gives you the wider brief, again, that sort of boards and governance are charged with looking at. Sort of the unders and overs come out through those periods. The key area here, of course, is we're looking for any significant variances from budget, so as the organisation can be nimble and make changes to get them back on track to where they need to be. It might be as high as having to lay staff off. It might be another decision made by actually employing more staff because of the growth plans we're having. So these things sort of, when tracked monthly, are much more effective than just looking at them manually after they've gone to your year-end accountant.
Are there rules of thumb in terms of when you say looking at the variances? So if we look at that just on the left-hand side, April 19, there's a variance there of income, obviously pretty significantly down there of nearly $14,000 from what I can see, so nearly 60-odd%. Is there a rule of thumb, or is it really just, it depends? Is that the answer to this question in terms of what the percentage variance would be before you really started to pay attention to it?
Yeah, a couple of the key drivers there are most people focus on their sales, because that's the easiest one to relate to. That's what we buy, sell, or make, or create, or what we represent. But in reality, probably a movement in the cost of sales is far more effective than a movement in sales. So the likes of a 5% increase in sales, as compared to say a 1% increase in the cost of sales, cost of sales can be far more effective than the increase in the turnover. The cost of sales itself are represented by the margins that you have and determined by the market, but they're certainly a key focus point for any organisation. Not for profits, cost of sales may look different than they may for normal businesses, but it's essentially it's the product that you're either providing or services you're providing, and the direct costs that you incur to get those out. So wage subsidies and all sorts of things come into play in that space.
Yeah, and I would assume if we broke it down further, government funding, charitable grants, all those sorts of things would fall into that income and cost of sales, right?
Absolutely, particularly for not-for-profits, where they differ from a normal business. Yeah.
Yeah, no, very definitely. So what I wanted to show you also was that, of course, if you're anything like some of the people that I know, and dare I say it, I am too. I mean, my eyes tend to glaze over a little bit, as important as this is when it comes to looking at the actual numbers themselves. But I find it really, really useful to be able to quickly look at something, I guess, in more graphical form, gives me a much quicker understanding of where some of those key pain points might be. I assume, Craig, as far as when you sit down with your clients, and I guess also thinking about not-for-profits, but even just businesses in general, do you find this way of looking at data is possibly easier for people sometimes, as much as it sort of pulls out of the detail and starts to go at a higher level again? Do you find people could find this sort of thing quite useful?
Oh, look, without doubt, Richard, in the last 4 to 5 years, I've tried to move my reporting space more around pictures than around numbers. You almost see the eyes glaze over when the numbers come back into the reports. But those pictures, just the ease, they tell a million stories and people read them so many different ways. And this graph you're showing here, as an example, just shows your budgeted income versus your actual, where there's been a very poor April month compared to May and June, which was pretty much, there may have been an issue in April. If it was here in New Zealand and it was April 20, I could tell you there was an issue. It was called COVID-19. But again, just those pictures instantly jump at you and tell you much more than you can say in a million words before you glaze over with the reports you've looked at here, Richard.
And out of interest, from a profit and loss perspective, is there any advice you'd give in terms of if there was someone listening, joining us on the webinar today, who's got that role of reporting back into a board or a committee of some sort, for example, on the financials of the organisation? Any advice to give in terms of what you would give? Would you present both the the numbers and maybe some graphs, or anything that makes it easier for those people in governance to really understand what's going on and offer some really good advice and suggestions and provide that governance support that they should be doing?
Yes, most definitely. I think don't underestimate your role on the board. Don't automatically accept or believe that everyone on the board understands the numbers. So it's your role typically on that board to sort of give them some comfort around what the numbers actually mean. Try and engage the use of pictures as much as you can, because people are more comfortable with it. And as I say, it sends a much better message in my mind than just the numbers. And certainly I think we'll talk soon about there's the likes of some sort of JV software that you can get that will enhance this type of presentation. So my boards just love it when, when I'm presenting to them more pictorial summations of what they are as a representation of how things are travelling.
No, good advice. And I think you said before too, there's something you'd be wanting to look at in terms of if someone does have access to it, either through software or some other way, it's assumed software. Good to look at this at least once every month. Is that right? Depending on the role that you've got, is it you want to keep an eye on this, pretty constantly, especially in an environment like this where it's changing all the time?
Yeah, look, you can do it monthly, and of course, as you've seen with MYOB here, you can forecast that out for any number of months if you need to look at the wider picture. But I think the other main tip really about profit and loss is focus on your income lines first. So how can we increase our sales, or how can we reduce those direct costs? Focus on those things which you can control, which is invoicing more regularly, or diversifying our income streams, talking to our customers quicker, more regularly if they owe us money. Focus on those things you can control, and that will certainly help put cash in your bank to the bottom line. So they're the things that are easy to control. The other things, paying your accounts a bit slower, all of those, you can do that as well, but it's not quite as effective as getting your money in earlier.
Yeah, and certainly profit and loss will help you understand where you're at, certainly from a comparison to budget, which can be incredibly valuable and really useful to pick you up on things that really, for whatever reason, they may not be in your general sphere of responsibility, but maybe other parts of the not-for-profit organisation you're a member of may not be doing so well. So a chance to jump in early and understand what's going on. So just quickly, and I'm not sure if you can see that warning sign that's come up on my screen, hopefully not. Doesn't look like it's going to shut us down anyway, that's the main thing. Just some FAQs there, I guess, in terms of some very basic stuff on profit and loss. As I said earlier on, it's basically a report that tracks your financial performance. So really good, as I just mentioned, to comparisons against budget or year-on-year results. With software, you can certainly do different things like that. Just to see if you're making ground or if you're falling behind, if there's something that you really need to spend some time and give your attention, I guess, to changing in a positive way. Obviously, it's important for understanding exactly how much profit you're actually making. And that's clearly something that's going to be critical to a board if you're reporting into a board or a committee of some sort. So very important for that. And you can help us with contributing most of your bottom line in areas of your organisation where it could be performing better. As I said, there goes my lights. I need to move around a little bit more. So really, really important for a few of those things. We'll talk, Craig, it was interesting, you were just sort of starting to get into that territory of cash flow and cash flow management. We'll give you some tips and advice around that a wee bit later on. One thing I was a bit remiss not to say earlier on was that when we started, is that if you had a question, you'll see there an ability to pose those. Jane's the person who's going to will pass those on to us. We'll have a Q&A section a wee bit later on in this webinar, but if there's something really on your mind now, just so it doesn't slip your mind and you miss the chance to ask it and have someone like Craig with his expertise answer it, anything about profit and loss that you're unsure of, don't worry if it feels like a silly question. That's what we're here for. Please, by all means, send that through to Jane now, and we can come back and touch on that stuff a wee bit later on. So thanks very much for that. So Craig, something else that seems like it's almost the dark arts. It's another one of those terms that people hear about an awful lot when you think about financial reporting, and that's balance sheets. So it's something I've seen quite a bit of the time, but again, like most non-accountants, I still struggle with this. So we've got one, just a nice simple version of one here, again using software to produce it. But let me just whip through these next 3 slides, I should say. So do you mind, just as you did with profit and loss, talking us through, give us a little bit more detail, I guess, here from your eyes, with your experience, when you see a balance sheet like this, what you're looking for in particular, and how people should be reading it?
Yeah, look, no problem, Richard. While I'm doing that, you may want to go around and either wave your hands or get your lights happening.
Yeah,
I'll move.
Oh, there we go.
Much better.
You can see me. Yeah.
Much better. Okay, so you look, the balance sheet, again, or statement of financial position, as it's referred to these days. Look, there are 3 main parts to the balance sheet. The assets we can all relate to, that's cash and it's stock or supplies or it's cars or copying equipment or fixed assets, all things we're very, very familiar with. Predominantly we can see and touch them and feel them and recognise with them. The liabilities, similarly, we get statements reminding us, at least monthly on what they are. So it's the people we owe money to, it's the long-term debt with banks, etc. And look, again, we're all familiar with that term, liabilities. And the difference between the quick assets, which is the cash and debtors, and the quick liabilities, or which is the creditors and accounts payable within 9 to 6 weeks, is what we call our working capital. So we'll come to that with the cash flows and the likes, but it's the amount of money we have available and the speed with which we can pay our suppliers as the invoices come in. The more important part of this page to me for not-for-profits is this section, which is the sort of equity section. And so in a normal business, the equity is simply the whole of the assets less the whole of the liabilities, which effectively represents the equity. And if we think of our house, quite simply, that we live in, it's the total value of the house less the money we owe the bank, and that the rest of that is the equity that we own in our house. Well, our businesses are no different. But for not-for-profits, this become particularly sort of relevant when COVID hit. And all not-for-profit boards should have some sort of equity reserves policy. So equity in a not-for-profit, again, is the accumulation of all of the profits, less any of the losses incurred over the years the organisation's been in existence. It's not an area we normally focus on, but for not-for-profits, it's paramount because they're in a different space when it comes to earning regular income. COVID hit, all of a sudden a lot of these funding sources dried up. Pub charities and the likes, where people weren't able to go and visit units, the income stream stopped, grants stopped, organisations weren't able to provide services they normally would for a number of months. That all meant we became more reliant on our reserves. And so by that, our reserves was how much cash have we got in the bank? How long can we exist before we have to A, lay people off, B, reduce our expenses, halve our rent, reduce our marketing, or even worse, C, a combination of the two above, or D, close our doors. So I can't stress how important
It's about
reserves are.
solvency. Is that right, Craig? So I mean, the word solvency comes to mind. I mean, that's effectively what we're looking at here, right? Is this not for profit or business, whatever it may be, solvent at the moment?
Absolutely. Solvency, an accounting term, I love it. Exactly right. Members' reserves for not-for-profit. Yep, definitely.
Yeah. I think the other thing it's interesting to pick up on, as you say, I mean, you can certainly, and this is part of that puzzle in terms of figuring out, are you in a position where you really need to make some really tough calls? And I note too, one of the things, if you do end up looking at that report we talked about, that said, you know, that 40% of not-for-profits in Australia anyway hadn't been making a profit for the last 3 years, even before COVID. It's also one of those times, I guess, to think about, we can talk about this if we have a bit of time later on, other income streams, because yes, COVID, as Craig said, has been, you know, dramatic in terms of locking off and cutting off income streams, especially for those people who would normally be out door to door or face to face, you know, fundraising and doing that sort of thing, running events. But here and there have been some pretty clever pivots, I think, from organisations too, in terms of looking at different income streams to bring that cash back in, but in a different way, potentially online or using something digital. So it all depends very much, of course, on what area or what sector you fall into as a not-for-profit. But so solvency, key thing. Okay, so Craig, in terms of just, hopefully this makes it even clearer to people. On one side there, just looking at the right-hand side of our screen at the moment, the total assets, as you said, the current assets plus the non-current assets. And on the other side, the equation, it's total liabilities over equity, right? So is that a fair way of making it really, really simple?
Yeah, yes, it is. Yeah, so on the left-hand side, under total assets, non-current assets, yeah, agreed. I think the other way of looking at equity, Richard, is it's the accumulation of profits or losses over the years you've been in existence. And I think another go-to for not-for-profit boards in particular is not to be embarrassed about making profits. A lot seem to think they exist for the community solely, but if they make losses, then they won't exist for too long. So, you know, there's an entitlement for them to make a profit, to be able to provide for some of the sort of catastrophes that can hit them at times in the future.
Yeah, and unlike, I guess, the cash flow reporting, which we'll go into very soon, and the profit and loss that you've already seen, the balance sheet is generally a much shorter, sharper snapshot view of your asset, liability, and equity account balances for any specific given date that you might plug into, you know, software if you're using someone like us. Really important, we talked about before in terms of the balance sheet helping to tell you if your organisation is actually solvent. That is, you own more assets than you owe in terms of liabilities. And as it says there at the bottom too on the left-hand side, understanding your organisation's financial position and if it can pay its bills on time. So really, really critical piece. And again, this is something when I've been involved in reporting back up to boards, even in my days working for social enterprises I have here in New Zealand, you know, we had advisory groups that's what we worked in with, and business advisors and what have you, was very much about, was still very focused on making a profit. It just happened because we were a social enterprise and operating under that sort of model that we were investing that profit back into the more community focused services that we had. It wasn't sort of distributed out like cash to shareholders. Yeah, so interesting place to be. And I guess it leads us in quite nicely to our next poll, which is, again, gives us a bit of a gleaning on where you're at. Now, the one point I'd make out on this, and it sounds like I may not be able to see it on screen, but the question there is pre-COVID, so not right now, because inevitably all organisations have taken a hit in some way, shape or form from a revenue perspective, but pre-COVID, so thinking back to earlier this year or even late last year, how long could your organisation have funded itself using its reserves? Which, Craig, just while people think about this, I said to you before, is that all about cash reserves? But you said, no, it's not just about cash reserves. Is that right? There's something else that funds into this as well, feeds into this.
Yeah, pretty much. We think of it as cash. It's actually the net of all the assets less the liabilities.
Yeah.
But in simplistic terms, we think of it as cash. So, you know, the key there is, you know, how much did you have available in your organisation when COVID hits, when your income streams, if you were a sport, for argument's sake, some winter sports couldn't run activities for, you know, a period of 3 or 4 months of a 6-month season. So all of a sudden, where they have seasonal income and they're cut off at the knees for activity, they definitely needed to reach into their reserves to be able to meet all of their wages and ongoing commitments for their organisation.
Yeah, so you'll see there, hopefully everyone's had a chance, the 50, 60 or so people have got on the webinar to answer that question. So we've got there obviously the not at all, you'll see the couple of months, 6 months, 12 months, or hopefully you fell into that category of more than 12 months, which would mean you'd be in pretty good stead, I would imagine, in terms of weathering the storm that we've had this year as far as COVID goes. Greg, because I can't see that, do you mind giving me a bit of an update there in terms of what sort of response we've had to that question?
Yeah, just come through the second, Richard, which is pretty good. And those that didn't have any reserves will certainly recall having weekly or board meetings, because they may have had to sort of close the doors. So we had 14% with only a couple of months of reserves, 24% with 6 months, 28 with 12, and thankfully the lion's share had more than 12 months in reserves, being 34%. And I challenge anyone listening today, if they know what their reserves policy is within their own organisation, because that's simply a really key target for you to address for the future. And thankfully, at least 34% of them had at least 12 months. My preference, Richard, 18 months expenditure covered by way of reserves. That way you can really sit back for rainy days.
Yeah. Out of interest, I mean, is that how Nexia operates as a firm or as an office? I would imagine MYOB has some pretty chunky cash reserves there, but inevitably, even a large organisation like ours still feels the impact of something like COVID clearly on revenue and those sorts of things.
Yes, and not so much talking for Nexia or our personal policy reserves, which I probably wouldn't share on this email, but certainly all of the not-for-profits that I certainly act for, and some of those are charitable organisations in Australia and New Zealand as well. And I love your picture.
And I just got a couple.
Right? That's some 10 years on, 9 years on now.
Yeah, it's one of those things. I thought I'd just grab a couple, and hopefully people, when you're looking back through the information that we've put together as part of this webinar, maybe later this afternoon or perhaps next week when you're looking back over the slides, as I hope you do at some point. Yeah, I mean, yes, you've heard the term, obviously we're all familiar with the term a rainy day, but as far as Christchurch goes, so certainly where I'm based and where Craig is based with Nexia, although they have offices in Auckland and a number of places we'll tell you about around Australia as well, the earthquake was a great realisation about how important this was in a range of ways in terms of business preparedness, in all sorts of ways, but certainly from a financial point of view, because as you can imagine, for us here, and thankfully it was just localised to Christchurch at the time, 10 years ago when those big earthquakes happened, it really basically just put a stop on everything. So there were a huge number of businesses. You can understand that building there. There were a lot of retail businesses underneath who simply, if they weren't prepared and didn't have money there, to pay staff and perhaps pay some of the bills that were coming due and those sorts of things, they simply would have gone out of business. We're very fortunate that I think a lot of businesses maybe didn't have as much as Craig would have liked, I suspect, but certainly had at least a few months long enough in reserve in terms of cash to be able to relocate, perhaps go online, start doing things in a different way and pivot. So they were able in many cases to survive, which is fantastic. And only just now really sort of moving back into the central city. So let's move into cash flow. Now this, Craig, just to start us off, is I don't know if there's one particular.
Sorry, can I just take you back to that last slide?
Yeah.
Predominant of our audience is Australian, and to be fair, Australians have the gold medal on catastrophes, whether it's floods, droughts, fires. These guys actually specialise it. So, these are some of our local catastrophes for sure, but Australians can certainly resonate with their share of issues and over the many, many years. So I'm sure reserves are something hopefully that is knee deep in their thought processes on governance.
Yeah, and it certainly sounded like from the poll results, as you read out before, Craig, and other people could see on screen, there's a pretty significant number of people who have done a great job, I guess, pre-COVID, putting themselves in a position. And actually, just before we move on, because the other thing with that, inevitably, because of COVID, even if you're in a great position to start with, in terms of reserves and what you could sort of, fund yourselves with, now would be the time, I guess, as we look ahead and think strategically about, well, what's the next year or two going to hold? Obviously, we've all heard about, the news around potential a couple of vaccines now, maybe coming to market, but that'll still take some time. So it's about still how can you maintain some reserves, because we can't guarantee, sadly, in the world that we live in, climate change and all the other things, especially in Australia, as you say, that there won't be other things to consider, over the next 12 to 18 months. So it's very much, I assume, Craig, what would your advice be to an organisation now still, if you're in that financial management position, think about how you can even now put stuff aside and keep some reserves aside in case?
Yeah, well, I guess the answer to that, no one could foresee COVID and the direct impact it had. And, we've had our mosque attacks and Australia's had their fires. So, the reality is that they've probably emptied some of their reserves over the last 6 months, Richard, given that they have been unable to trade or whatever that might be. So, again, just a prudent governance is really looking to restore those reserves to levels for those future events that we can't foresee.
And the reality may be that something you just can't do that for now, but it may just be looking ahead to say, when is that position, when we get through this, out of various lockdowns and what have you, when can we start putting a little bit aside, if it's cash, or looking at other ways that we can have some reserves, I guess, to the side to help us. So from a cash flow perspective, I was going to say before that if we talk about profit and loss, we talk about balance sheets and our cash flow statements, but cash flow in broad terms, everything here we're talking about is important, but I think cash flow in particular, and obviously from a reporting perspective, the statement of cash flow, I'd almost say it kind of trumps everything else. They're all important, excuse the term, trumps everything else, but I think this is particularly important. And I think there's time for another poll here. Well, look at my watch, we have got time for this. So love you to dive into this poll. Jane will put on screen if she hasn't already. I'd like you to tell me, and we'll talk about the New Zealand answer to this as well, but what percentage of Australian businesses that fail in the first 3 years are actually profitable when they fail? Seems kind of counterintuitive that you can be profitable and fail, but I assume, Craig, from your experience, that's entirely possible. Is that right? You can be running a profit, but actually you've gone under.
Yeah, absolutely. And part of the effect over the next few slides is simply to demonstrate the difference between accrual accounting and cash accounting. Cash accounting is something that we relate to as people. It's the money we see in our bank. It's affected daily by who pays us and who doesn't, and who we pay and who we don't pay. Accrual accounting is the fact that we measure that people owe us money, but it hasn't necessarily turned up in our bank account yet. So, it's a little bit like sending your accounts to the bank and he reports back in English, but the accounts we may have sent him are in Portuguese. Sometimes we speak 2 different languages at times.
So tell me, Craig, you'll be able to see on screen. I can't for whatever reason, but have we got most people you think have responded to that poll in terms of what the percentage they think will be? What you bring us the results?
Just come up, Richard. So none was got 0, 10% got 11, 25% got 29%, and the lion's share, to be fair, 57% at 50%.
Wow. Okay. Well, you're right on the money for those people. So yeah, from more recent reporting, it's around about 50% of Australian businesses that fail within the first 3 years are actually profitable at the time that they go under. In New Zealand, it's done a little bit differently, but it's a very similar, I guess, profile in terms of those businesses that go out of business relatively quickly, I guess, after starting. There's a rather significant percentage of those that are actually running a profit, as I say, at the time going under. And we've heard this is a pretty familiar term. Whether or not you understand it, that's something else. But Craig, is this a value that we should all be living by, even not for profits?
Yes, I think, look, statistics, bloody statistics, to be fair, Richard. A profit may have been as much as $100, and that may not have been enough to pay all the people that were trying to sort of run the business. So you're right, 57% profitable, but it just really puts the reality and the asset upon actually understanding your business better and actually being able to get the money in, as opposed to just invoicing it and not collecting it, or giving bad service, creating bad debts, unanswered sort of problems in terms of your sales, all of those things that go about managing a successful business.
You really want it in the bank. The guts of it is you want it in the bank, right? So if there is a way of, doing things in a different way, especially around COVID, we talked before about people not being able to do, say, fundraising, perhaps, through events or face-to-face. I've dealt with a lot of, I was selling my house recently, I've dealt with a lot of small businesses here in Christchurch in New Zealand, and it's amazing the number that have moved quite cleverly to, mobile EFTPOS and payment facilities and those sorts of things. So now when you're dealing with trade, they're getting that money in their bank immediately after they've done the plumbing work, for example. And so it's thinking about how that sort of thinking might apply, I guess, to your not-for-profit as well, in terms of how can you make sure whether it's a donation or income, whether it be through a private or public sector source, is hitting the bank account, much sooner than perhaps it might have been in the past. So let's have a look at, this is a budget up the top here. Craig, you might want to explain that, but I mean, this is effectively the start, and we'll scroll down the page through, slide by slide, but this is what someone's going to find when they sort of go into our reports menu using MYOB Essentials, and start to look at their cash flow. So this is a much more detailed drill down, isn't it, of what's going on, what's coming in, what's going out, and where things are at in real time?
Yeah, absolutely, Richard. So the difference in this budget you've demonstrated with the big circle on the left in red there is the fact that this is the cash flow as opposed to the profit and loss. So the profit and loss is accrual accounting. So that means people we've invoiced and people that we've received goods from, but we haven't necessarily received the money from or paid them yet. So it deliberately demonstrates the money coming in versus the money going out. So yes, a good report, very succinct, very relevant to people that run these organisations, because it's directly related to what's sitting in our bank and what's not. And again, the budget that we've done here, it'll take into account seasonality. So not-for-profits, can be very seasonal with when they get their income in, might be in line with their fundraising. Perhaps they need to think a bit more regularly about how regularly they get income and lines in, whether they can, they would have all had to adapt over the years to sort of get an online presence, because people don't carry cash in their pocket for donations these days. Yeah, just how they can spread their payments to suppliers and those other things that will be very handy in terms of managing their cash better. Tax is another one of those things that can actually be managed by spreading over a year as opposed to just paying initially if you're in that space.
Yeah, very much. And so we can just work our way down. I mean, this is one of those things which possibly seems at first, look, if you're not familiar with these sorts of, I guess, reporting, then it may seem a bit overwhelming because there's just so much here. But the lines that we've highlighted, I guess, are the key things. And if you want to break down into detail there, we can see, for example, the expenses listed out in this particular business we're looking at. There's office supplies, printing and stationery, etc. There's a range of things there. So again, you can consolidate, but ideally, I think when it comes to cash flow, this is something you'd want to see in much greater detail. Is that right, Craig?
Yeah, definitely. It's sort of a mixture of both from the accountant's perspective. You may make a conscious decision to delay a supplier's payment for a period of 8 weeks, just because the cash isn't coming in like it should, or if you've had to meet holiday pays or whatever. So that's where you sort of need to revert back into the, well, okay, if I've delayed it, is that actually just delaying the cash, or is that actually affecting my profit? So that's where you may switch back to the P&L, as we call it in MYOB. So yeah, that's this just demonstrates the ongoing, in this particular example you've given us, the expected surplus profits on a line-to-line basis, which makes it much easier to understand when setting, certainly and certainly when understanding it, but when reporting it at a governance level, you'd see those original slides that we saw earlier where they were all condensed into just the main headings.
Yeah, so a lot more detail here. So in terms of just quickly, before we move on to a little bit of information, and some thoughts around forecasting for cash flow, because that's, as Craig's already pointed out a few times, that's an incredibly important thing to be looking at on a pretty regular basis at the moment, because our world is just changing so much around us. Things are outside our control, so it's how we react and respond to that, prepare for it. But from a cash flow statement point of view, this is effectively the ins and outs, right? So it's that nice detailed look about what's coming in, what's going out of bank accounts. And as you can see there on screen, and we talked a little bit before the front end of the section, there are a huge number of organisations that effectively go out of business just because of cash flow. They may well have been profitable, but because they haven't had real control over the ins and outs and cash hitting the bank when their expenses due, that's become a real problem for them. So yes, technically on paper, you could argue they're profitable, but it doesn't help them trade at all if they don't have their cash flow under control. So really big reason behind why a lot of organisations fail. And I think in terms of reporting, Craig, We've just to quickly do a recap here between the profit and loss, the balance sheet, the cash flow statement. This is all things that you would expect, I assume, someone in the governance space of a not-for-profit to be seeing at least monthly, I guess, or that board meeting or the advisory group meeting, the committee meeting, those sorts of things, keeping a really good eye on this stuff and helping, I guess, those people within the organisation, you know, from a governance perspective, just to, I guess, you know, run things a bit tighter.
Yeah, absolutely, Richard. Look, starts with the cash flow, actually. So, you know, the cash flow actually shows your expectations, and the P&L and the balance sheet record the results from that. And the reality is it means we're just much more nimble to make changes, nimble to either, as I say, increase or lay off staff, or, you know, increase product lines, or, you know, or spread and diverse revenue streams. Really, really important. And I think that they're the three main documents you need, bare minimum, in any organisation. And don't forget the ability that having these processes in place and good software makes it a lot easier to hand over the job to the next person who might be filling in the role. So, you know, you've got integrity, you've got a robust reporting system. You can sort of just spend a few minutes typing up the reports for the months because they're pretty much systematic and they're on your system anyway. And it certainly makes that that ability for someone to fulfill that role in the future much better.
And really, really easy. I mean, like goodness knows how people used to do it, you know, well before software, but certainly very, very easy to quickly pull up, you know, an updated P&L or a balance sheet, or indeed, obviously, your cash flow, including the forecast you saw before, how we were comparing it, you know, month on month. So, Craig, I don't know if you'd talk us through this. I think the key things here, and you've kind of touched on it, but hopefully people are gleaning too, just having someone like you as a financial advisor. You know, you would hope most organisations will have an accountant or a financial advisor already. But someone you can lean on, I guess, and actively talk to, and communication, I guess, is a pretty critical part of that in terms of the cycle here. So do you want to just quickly give us a talk through, I guess, in terms of what you can see on screen at the moment, Craig, as far as that forecasting cycle and how it works?
Yeah, certainly. Thanks, Richard. I think before I start, as I've touched on it earlier, you've got to look at strengthening your board with acumen and finance. So you need someone on your board that's got some knowledge of some sort around the finance space. And then in turn with them, that and your CEO, which should also be very capable in this finance space, you need to have an outside financial advisor that you're dealing with. And so again, make sure you're getting good use of your financial advisor. Times during COVID, we were regularly, at least weekly, either talking to our clients or emailing them with links for subsidies, links for grants, links for cheap loans, links for everything available to them. You know, issues of leases, who's discounting what leases, what's the market doing, how does this affect your tax, your provisional tax, all those things we were regularly communicating with our clients. If you've not got an advisor that's giving you that information, then you probably need to think about what they are providing you, because the days are gone with just bookkeepers providing reports that no one really understands or talks to. So that's my strong bit of advice there. In terms of predicting your income and cash and payments, areas for improvement, again, if you're not confident with this, set it with your financial advisor. This is a once a year thing that you can do that actually makes you think about how we can control the bottom line. Tracking performance, that comes down to those monthly reports that we produce for our boards and understanding them. And again, comparing it, how we're going to how we thought we were going, so we can make key decisions. Communication, 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 man. Can't say it enough.
And I think this is probably, sorry, Greg, and I think this is probably a good time, actually, just looking at the time that we've got left, which is relatively limited. We've got a few other bits and pieces to talk about, but this would be a good time, if you haven't already, to probably think about any questions you might have with regard to profit and loss or balance sheets or cash flow. And while you think of that, if you haven't got a question there already, but if something pops in your head, by all means, just send it through to Jane and she can let us know very, very soon when we can take some questions. But let's just whip through a couple of slides here, Craig. This is kind of a nice summary, I guess. There's lots of different things, you know, an organisation can do in terms of managing its cash flow, but there's some pretty good stuff here. You and I have talked about when we were getting ready for this, you know, the importance of scheduling time to work on cash flow. So not just doing your best, you know, put it in your diary, actually calendar some time in relatively regularly to at least check the report, run it if you're using software, and do some thinking about cash flow, which probably means thinking about some of these other things here. Is there a particular I don't know, thought on some of this, Craig? Is there one or two there that you really like that you've seen really work well for other organisations you've been advising?
Yeah, there is, and it's a real simple one, Richard. Instead of sending invoices or subs out at the end of each month, collect them during the month. Collect them as soon as you provided your service. If you collect the invoice 2 weeks earlier than the end of the month, they're much more likely to pay it 2 weeks earlier than when you'd normally wait till the 20th of the month following. So if you've provided a service, there's a direct relationship with that service you provided and the time the client or customer gets the invoice. Do it much more regularly. Cuts down the onus at month end, and then no one loves, that time where they're just stuck in writing invoices. So just bill more regularly at the completion of work wherever possible. Data management, that's just, again, link with your financial advisor. That's just having a good process about following up people and an understanding and empathy for when they genuinely can't pay you on time. So they're two of the easy bits that we can change very quickly in our organisations.
Very good, yeah. And we talked a little bit too about, and this year's been a great one. I know of a number of, profit-driven organisations who have done it, but one or two not-for-profits as well who have found, just simply because they've been forced to, different ways of doing things, running, delivering services over sort of platform that we're on today. Zoom is a big one as well. Being able to check in with the communities and still connect with communities, deliver services online, and also find a way, some of them, and even using partners of Connecting Up, I understand, find a way to make it, very affordable and easy to actually collect money online that they haven't done in the past. So this year has been a significant amount of change for a lot of people, looking at where they're, how they change the way they can deliver their services and run their organisation, but also change the way that they bring the cash in. So Jane, I don't know if you can talk to us at the moment. Are there any questions there as far as profit and loss balance sheets or anything to do with cash flow go?
Yes, we've got a couple of questions. One from Lynn saying, I came into an NFP same time as COVID with no MYOB experience. Can you advise if there are free MYOB lessons anywhere online?
Yes, there absolutely are. And if you like, it might even be a case we can follow up personally with you if you like, because there's quite a bit of information I can send your way. There's some links that'll come out after this to the MYOB Academy. So there's some really good self-paced interactive online training you can take, all of which is free. And if you're using us, you'll be able to access to, I'll introduce you to, if you're in Australia, it'll be Shihan, maybe it's Cecilia if you're in New Zealand, the account manager as well. So they can point you in the right direction too. That's one of the other benefits of us being aligned with Connecting Up as well. So yep, we can certainly help out with that. We can definitely get you skilled up very quickly.
Great, thank you. And another question from Debbie. I use AccountWrite, the app on my computer. How do I access the graphical representation of the reports? Do I need to export it to Excel?
Craig, are you familiar with AccountWrite? Is that something you've done before?
No, I'm going to let you technically answer that one, Richard. I'm enjoying watching you squirm.
I thought so. I'm surprised. I was expecting, yeah. No, that's okay. No, I can certainly do. I can't, to be honest, being in marketing, I'm afraid I'm probably not the product expert you need right here and now. I've got a pretty cursory understanding, I guess, of how the intricacies work. Having said that, if you're able to flick your details through to Jane, I can make sure that today, it won't be any later than today, depending on where you are. If you're, Jane, if that person's in Australia or New Zealand?
No, I can't see.
Either way, if we can get the contact details, I'm absolutely happy. Either myself, Shihan, or Cecilia, who I'll introduce very soon, will be able to follow up, and we can talk you through that. Or get one of our product specialists to give you a quick call and talk you through that. I'd be very surprised if you couldn't, but that's probably all I can say at this point. So I'm sorry I can't answer in more detail and give you the exact specific instruction on how to do it. Any other questions there, Jane? Financial matters?
So somebody else, Karina, was also saying she'd like to hear the answer for AccountWrite as well. So Karina, I'll just drop you my email now as well.
What I might, yeah, in fact, what I can do, Jane, if you like, I can get the answer. So if you didn't mind holding off sending out your post-webinar, or maybe we can send out maybe a second one, but I can certainly answer those questions. Yeah, and I can send out the links to the training too for everyone through Jane and Connecting Up, but also get the detail on the account right and the display, whether or not you can get the nice graphical displays. That's certainly easy in Essentials, and I'd be surprised if you couldn't do it in account right, but I'll find out and I'll come back to you.
Excellent.
Great.
No more questions at the moment. So just for now, thank you very much, Richard and Craig, for joining us today. Yeah, there's a couple more people just typing in that they also want to know the account right. So don't worry, everybody. We will be sending. I will hold off sending the recording and the slides until Richard has sent over some info. So everybody will get that answer.
It sounds like it might even be that we run actually a session very soon. We might even look at seeing if we can pull together a session just for those account right users to go through some of the stuff that you know, and how you can do it that Craig and I have talked about this afternoon. I will just quickly whip through. Up there go my lights again. It must be time to go. The one thing I would say is that I won't talk through this clearly because we've taken up our time. But what I'll do is I'll send through this, as you've just heard. Jane will send out the details in this deck. And it's got a whole bunch of links to various things, other information there. There's a wee bit there, including the links to Connecting Up if you're in Australia, or TechSuper New Zealand, in terms of the 30% off that you can get through those guys for MYOB Essentials or Account Right, and the other benefits there. I've talked about Cecilia and Shahan. You'll see their contact details. These are the two lovely people. So depending on where you are, Cecilia will be the one in New Zealand, and Shahan is in Australia. They're effectively your go-to person for anything to do with MYOB. So they're the account manager there. The other thing that we'll do is we'll send you through some details on a brand new, if you're based in Victoria, this will be relevant, a brand new business digital adoption program, which includes not-for-profits and charities as well, or people who aren't registered for GST. So you can actually get services like ours, software like ours, rebated up to $1,200. And I'll also send you through the contact details for Craig and the team at Nexia. As I said before, they're through New Zealand, Christchurch and Auckland, and also right through Australia. So plenty of offices there. And I'll even send you details about how you can get some Nexia time for nothing. But there's a bit of a deadline on that, so keep an eye out today. I'll get my act together on Account Right, so I can get that to Jane and she can get the information out to you. Other than that, thank you very much. It's a very quick wrap up at the end. Thanks, Jane.
Brilliant. Thank you both. And thank you, everybody, for joining us today. Like I said before, there will be a very, very quick survey that will just pop up once this webinar is closed down. If you could please take a couple of minutes to fill that in, we would really appreciate it. So thanks once again to Richard and Craig, and hopefully we will see you all again very soon.
Thanks, Jane. Thanks, Richard. Travel well.
Thanks very much. Lovely to talk to you all. Thanks for spending some time with us. Bye.
Bye-bye.